Kenya's fashion and textile industry is set for a major boost following a financing agreement between Equity Bank and the Association for Designers in Kenya. Here is more.
Access to finance is a major impediment to the growth of SMEs in Kenya, especially in the creative industry. During the launch of a report by HIVOS and the Association of African Designers on the state of the fashion and textile industry, Equity Bank announced a new service dubbed Maridadi Business that offers financing of up to $1 million. This service is expected to encourage the growth of the local textile industry.
When I look at the retail outlets, the boutiques that are principally our customers, their biggest responsibility of stocking their shops is running out of the country to go to Turkey, to go to other places, to bring the wear. And the focus on designers, and hopefully linking this with the production houses, would then give us an opportunity to stock the boutiques, the retail outlets, our malls with Kenyan design and Kenyan made fashion items.
The Kenya Fashion Report indicates that the country's textile industry contributes less than 0.6% to the GDP and 7% to the export market. Additionally, there still exists a huge trade deficit with markets outside Africa.
In terms of fabrics, you export none. There is a little bit of KKK that is being exported to the region, but you import $115 million worth of things. Now it becomes interesting. In terms of garments, knitted garments of jersey, you export $205 million, but you import 255. This is new products. When it comes to woven garments, you export 219 million and you import 320 million. A net importer. The last one is interesting. Mitumba. This $155 million that you import. Guys, let's be very frank. That figure is grossly underestimated.
If we abolish Mutumba, and the government has moved very quickly in the East African community, all that we are saying is that we will not import second-hand, but we will import new. And the question is, what is the difference other than increasing the price? What is the difference? We're just increasing the price, the cost of what we are wearing. So why don't we produce in Kenya? Why don't we give our creative industry an opportunity to dress Kenyans, to clothe Kenyans?
In order to integrate small tailors into the national value chain, there is need to create room for specialization and integration between sector players.
We also realized that there is a space for production houses. We realize production houses need to be in place so that every designer doesn't have to own machinery. I think the art of specialization, the art of focus in what you are best at.
The industry is fragmented. There are no linkages. The cotton players, the ginners, the weavers, the knitters, the garment manufacturers, the retailers, none, they are operating in silos. You're not talking to each other. 80% of this 75,000 operate in the informal sector. You're not even registered as a company. If you're not registered as a company, how can you do import or export? How can you go and sell to an established retailer who wants to pay you in check, don't have an account?
The Kenyan textile industry currently has the potential to produce over 300,000 jobs, and the government is keen on leveraging on these opportunities.
When we look at it from Vision 2030, and those who have bothered to study the industrialization policy and blueprint for the country, the textile industry is a base of that industrialization. The country felt it could do very, very well. And truly, we have done very well. Those who, again, may not have the statistics, I think America now is our third export market. And when you look at what we are selling to America, it's only textile from the export processing zone. So essentially, it has come all the way. So the textile industry is very, very big.